Okay, let's look here. This is your W-4. You have a new job or whatever. You're married filing jointly. You have two people in your family that are both working. If you can see, the chart that you get when you're W-4 doesn't often work for two people, but it tries. So I recommend the best thing to do is go ahead and fill at the top. Leave this as all like zeros. Check this box. It gets you pretty close. So if you check that box, what happens is you'll get this. This is adjustment on wages. This is what happens if you click that box. This is your new amount. So here's what your 1040 looks like. This is your tax bracket. So let's take this example here. Let's say the taxpayer makes $400,000, the spouse is $200,000. That's a total W-2 income of $600,000. Now, this is, let's say you're having $66,000 withheld for your wages for a pension. Take that out. So say this person made $450,000 and they're having $50,000 withheld for a 401k or something like that. It's the $400,000, the taxable amount. That's what we're looking for. So based on these numbers here, this is what the employer most likely is using to actually, most likely they're probably using a computer program. It's just calculating it. So in this example, taxpayer is 132, spouse has 17. So divide these out. And so taxpayer is having 33% of the amount withheld from wages. The spouse is having 9%. So this is a total wages subject to tax. This is the amount that's being withheld. This couple here had $30,000 in deduction. So we're just talking total deductions here that brought down taxable income. So total amount from W-2s, this is at $600,000. The withholding amount comes after this on the tax return because this just brings you down to taxable income. So taxable in here is $570. That's a amount you would see right here on this line. If you do tax divided by taxable income, this is at 25%. So on average, you're paying 25% tax. So you would like to see 25% of each of these numbers withheld. As you can see, they're not quite there, but we're taking all this into account, looking if there's a shortfall or excess. In this particular example, was it set up like this? They had $6,000 extra withheld. So normally check that box and let it do what it's going to do. Look at your first paycheck and see if you're on track. So you're looking at, does the taxpayer have about this much withheld? Does the spouse have about this much withheld? And again, remember, these wages up here, you're looking at after a pension plan or anything that's coming out pre-tax. Don't consider that. Just consider the taxable amount that you get. And should be covered. So again, when you get your first paycheck, just look and make sure that you're on track. And this is hopefully more intuitive and should get you closer to where you're looking at. And I think your guide, Drew, is looking at last year's tax return and seeing if on track. Another rule of thumb is maybe, let's say your income's about the same, just make sure your withholding is on track with what the job you had before. All right.